Silver is shining brighter than ever. In 2025 alone, silver prices have rallied by more than 40%, beating equities and turning into one of the hottest investment stories of the year. But silver is not just about jewelry anymore. It's powering solar panels, electric vehicles, electronics, and even medical devices. So if you want to invest in silver through mutual funds, which options are the best for you? In this video, we will compare the top 3 silver mutual funds in India by the size of their AUM. ICICI Prudential, Nippon India and HDFC, side by side. And as a bonus, I will also show you some funds that combine both gold and silver in one basket, which might be even smarter for some investors. Stick with me till the end because this video is going to be packed with insights and information which can help you in your investment journey. Before we begin this video, let me introduce myself. My name is Latish, and if you're someone who's looking for help in terms of planning your investments through mutual funds, you can always contact me on the number which you see on the screen. You'll also find in the description the WhatsApp link to contact me. To really understand why silver funds are booming, we first need to look at the bigger picture. Silver is unique because it's both a precious metal and an industrial commodity. On one side, like gold, it's considered auspicious in India. Families buy silver around festivals, and it has a cultural importance as a store of value. But on the other side, silver is powering the technologies of the future. Over 52% of global silver demand today comes from industrial applications. Like I've mentioned, it is used in various types of solar panels, electric vehicles, 5G electronics, and even water purification and pharma. Did you know that each solar cell uses about 100 milligrams of silver, and an electric car uses almost twice the silver of a normal petrol or diesel car? At the same time, supply hasn't kept pace. The silver market has been structural deficit for 5 consecutive years, meaning demand is consistently outpacing supply. This supply-demand imbalance is one reason silver has rallied over 40% in 2025, while gold has risen around 34%. There is also a fascinating relative valuation story here. The gold to silver ratio historically averages around 69, but right now, as of September 2025, it's around 86, which means silver is undervalued compared to gold. Whenever this ratio has been stretched in the past, silver has often staged a catch-up rally. That's why many investors believe silver still has room to run. So the case for silver today is both cultural and industrial, both short-term momentum and also a long-term growth. Now before we move on, let me share something really useful that I personally rely on these funds comparisons. I used the MF Lab feature on Rupeesy app to do this side-by-side analysis between ICICI, Nippon and HDFC silver funds. With this feature of MF Lab, you can compare different funds instantly, check overlap between them, analyze sector allocation and also asset mix if you're looking for a comparison in a normal mutual fund, and test how your portfolio would behave before you can invest. Rupeesy is a platform trusted by lakhs of investors for over 20 years. It's 100% AMFI and SEBI compliant, and account opening is absolutely free with zero AMC charges. So if you want to explore silver funds or even gold and equity funds confidently and in one place, I highly recommend you using the Rupeesy app. The link to open your account is in the description, and also you will find it in the pinned comment. Now let's get into the heart of the video, the top 3 silver mutual funds in India. These are ICICI Prudential Silver ETF Fund of Fund, Nippon India Silver ETF Fund of Fund and HDFC Silver ETF Fund of Fund. Let's start with a scale and size. ICICI is the biggest with an AUM of about 2,160 crores. Nippon is second at 1,209 and HDFC is third with around 652 crores. There are also other mutual funds of silver available. I have only taken the top 3 in terms of the size. Structure-wise, all 3 are fund of funds, meaning they invest primarily in their own silver ETFs, which in turn hold physical silver of 99.9% purity. ICICI invests over 98% silver ETF, Nippon India invests nearly 100% and HDFC follows the same. Performance-wise, the story is really interesting. ICICI has delivered around 35.9% returns in the last 1 year and about 27% CAGR over the last 3 years. And since inception in 2022, around 17.9% CAGR. Nippon has been neck to neck with 35.9% 1-year returns. 3-year CAGR is about 27.5% and since inception it's given 18% CAGR. HDFC, while smaller, has been standout short-term performer, delivering around 42.6 in just last 1 year. And since inception in October 2022, it has given 30% CAGR. When it comes to cost, ICICI is the most efficient. If you look at the direct plan expense ratio is 0.12%, though you need to add about 0.4% for the underlying ETF. Nippon's expense ratio is about 0.59% and HDFC is around 0.6%. On accessibility, Nippon scores extra points because it allows SIPs starting from as low as 100 rupees. That makes it really attractive for retail investors who want to build a silver exposure slowly. ICICI and HDFC also allow SIPs, but Nippon's low entry ticket has made it especially popular. And finally, on trust and brand value, HDFC comes with over 12 years of experience managing commodity ETFs. ICICI brings scale and cost leadership, while Nippon has first mover advantage and retail reach. So side by side, here is how they look. ICICI leads on scale and cost, Nippon on accessibility and HDFC on short-term performance. Numbers aside, there's also a very practical reason to prefer these digital silver funds over buying physical silver. If you try to buy 15 lakh worth of silver in physical form, you will end up with around 14 kilograms of metal. Storing that safely at home is not only difficult but also risky. Silver is bulky. Its density is about half of that of gold, which means you need double the space for the same value. You will also end up paying making charges, GST, and also an insurance if you want to keep it safe. On the other hand, through these funds, you will get silver digitally. No worries about purity because the ETFs hold 99.9% fine silver. No worries about theft or storage. You can start with as little as 100 rupees in Nippon or a few hundred rupees in ICICI and HDFC. And it's liquid. You can redeem units anytime without having to go to a jeweler. This is why mutual funds are becoming the smarter way to add silver exposure to your portfolio. Now let's move to the bonus part of today's video. Funds that invest both in gold and silver. One example is the Motilal Oswal Gold and Silver ETF Fund. It typically allocates 70% to gold and 30% silver. Gold provides stability as a safe haven asset, while silver adds growth from industrial demand. In fact, over the last year, this fund has delivered nearly 39% thanks to the rally in both the metals. Another option is Edelweiss Gold and Silver ETF, Fund of Fund. This is designed to give you the best of both worlds in one vehicle. In 2025, gold is up around 34% and silver over 41%. By combining both, you don't have to pick one. You get the defensive power of gold and cyclical upside of silver in single product. As in this fund, you have 50% allocation in both. These combo funds are especially useful for investors who want diversification without having to split their money across multiple funds. You get professional rebalancing, liquidity, and convenience all in one scheme. So let's wrap it up. Silver has always had cultural importance in India, but today it's also a crucial industrial metal driving the green energy revolution. With supply falling short and demand rising, the investment case is strong. If you're looking at silver mutual funds, ICICI Prudential Silver ETF FOF is the leader in size and cost efficiency. Nippon India Silver is the most retail friendly with SIP starting with just 100 rupees. And HDFC Silver ETF FOF has delivered the strongest short-term performance and comes with the trust of HDFC brand. You will find all of these ETFs in the Rupeesy app, for which the link is provided in the description. And if you don't want to choose between gold and silver, funds like Motilal Oswal and Edelweiss are excellent ways to hold both metals in one basket. At the end of the day, gold protects, silver grows, and together they shine. Adding these metals to your mutual fund portfolio can give you both safety and opportunity. So that was the video on the silver fund of funds which are available in the market. If you did like this video, make sure to like, subscribe, and share it with others who are exploring commodity investments. And if you're looking for personalized advice on how silver or gold fits into your portfolio, you can always contact me on the WhatsApp number which you see on the screen. Also, you'll find the link in the description. Until we see the next time with more videos about mutual funds and investing, thank you for watching and have a good day.